Bank of Canada holds firm today. What does it mean for the single most important asset class in Canada? Yep, that's real estate. To help break it all down, we're joined by Ron Butler, the head of Butler, the founder of Butler Mortgage, and a fantastic podcast and YouTube channel, The Angry Mortgage Broker. It's one of my favorite listens and watches. Ron, congratulations on all your success.
Oh, that's you'd be surprised how little success I actually have, but still, thank you. Very gracious. Thanks.
Let's talk about the Bank of Canada decision today. How do you think that's going to impact what is something that you've been covering, I think to your credit, in a way that a lot of the mainstream press has not, which is a real estate market that is in collapse, especially here in Toronto?
Well, there is, it takes time, but mainstream has caught up. You're going to see probably a story every couple of days about it moving forward. It is in collapse. The Bank of Canada telegraphed this hold. I can't tell you how long ago. Probably like the day after the last announcement, everybody knew there was going to be no change today. The bank it has a bit of a problem, and it's sort of a problem that many central bankers face at given times. He knows something's going to go wrong. The Bank of Canada governor knows something's going to go wrong with the economy, but it's not absolutely evident. It's evident to us in Toronto. We are like Windsor and Toronto are like the epicenter of the economic disaster in Canada. We have an unemployment rate in Toronto that's approaching 10%.
Wow.
Like, it's just really out there.
Yeah.
So we feel it. The Bank of Canada governor is dealing with the whole country. Things are nowhere near as problematic in Quebec or in the prairies in Alberta and the Atlantic as here. It's here and it's BC. Now, that's half the population of Canada when you talk about here in Ontario and BC. But that's what we're looking at now, is that he sees something's going to happen. It's not there yet. Like, it's not just absolutely punching me in the face yet with the bad economy.
Yeah.
I know it will get worse. However, I have an inflation issue in that I don't completely understand what's going to happen with the trade war.
Yeah.
And nobody does. I mean, absolutely nobody does. Even the president of the United States doesn't know, because he could change his mind in an hour about what's happening. So since we don't know and he doesn't know, and there are some obvious inflationary impacts of however it goes in the trade war, it's easiest just to say no change. And that was very obvious 6 weeks ago, 3 weeks ago, today,
tomorrow, next week.
And it's pretty obvious for the September.
Wow, so you think right out to September. Talk to us, Ron, about where, especially the condo market, finds itself in Toronto at this moment. You've been in this business for decades. How bad is it right now?
Oh, it's really bad. The condo debacle in the GTA in Southern Ontario will end up with losses over $50 billion. So that's losses that are spread out between some lenders, very little. The banks don't have anything to worry about with this condo disaster. Mainly buyers, mainly people who bought pre-construction, who bought condos a short time ago that on a resale, they're down. If you bought 2 years ago, your condo's down in value. If you bought pre-construction, you're completely doomed. I mean, it's just a bloodbath. And the reason being is it's exactly the same as a classic bubble. We'll go back 450 years to the Dutch tulip bubble. This is people looking in the rearview mirror. They're saying, okay, we made money on the condo in 2012. We bought in 2012. We sold in 2018, whenever. We sold. We made a ton. Let's just keep doing it. Nothing will change. And they ignored the fact that the prices were going up so fast that if you actually did have to take that condo on and try to rent it, you'd have to rent it for a number that absolutely nobody would pay or could pay. Yeah. So it really is a classic bubble of pretty big proportions right now. So it'll just get worse.
I've learned so much listening to your podcast, because a part of the problem, Ron, has been cities and the extent to which they've gorged on development fees. Those fees have pushed up the cost of construction. You have the big inflation spike post-COVID. So where the heck does this go from here? We're seeing, again, I don't know if you'll remind me what the condo sales numbers were in the entire GTA of the last month, but I mean, we're talking, you need a particle accelerator to go out and find enough people willing to purchase a condo today. But what happens next? I mean, prices are high. Prices for builders are high. And as you say, the gap is opening up between what people can get for rent, because rents are plunging, and what the builders need to sell those units to create enough profit for them to convince a bank to lend to them, to put a shovel in the ground, to build, housing that'll come online, 4 or 5 years from now.
Well, that's a great question. And because it's been, because builders have been facing this dilemma for the last 16 months, this is nothing new to them. They've already come up with all the solutions, and the solutions make sense. You have to eliminate the tax, the GST, and the provincial tax on brand new home building. You have to take it out of the equation. You have to reduce development fees, which in the case of Toronto in 25 years went up almost 1,000%.
Wow.
Like, that's a real number. We didn't make that up.
Yeah.
You can go back into the 1990s, and in some cases, the development fee on a house was like $3,500 to build a brand new house in the city of Toronto. Tear the old one down, build a new one up. $3,500 in the 90s. So today, that would be about $300,000.
Wow.
So that's like just a completely insane level of increase. So the consensus is, chop the development fees drastically, 80, 90%, eliminate the GST, and that's enough. That's all you really need. Yes, there's some construction cost increases, trades, materials. Even some of that has come down. Mm-hmm. Steel will obviously come down in price eventually, either through Canadian supports or through some other means. So there is a method to do this. Immediately everybody says, whoa. If you do that, if you cut all these taxes and fees, the developer won't pass it on to the consumer. Well, I got news for everybody. If your sales are zero, you will pass it on to the consumer. Like when they took off the carbon tax on gas, the next day the price went down. So it's exactly the same. If you can't sell a condo, you will take all of these deductions, if you're given them, and you will pour it into a reduction in price, because otherwise you're out of business.
Because you're saying, Ron, that a lot of the pre-sales that these developers are trying to organize the last year or so, nobody's showing up. Nobody's buying. There's zero bid.
There's zero bid. You can open a sales office, and many people, I think 90 sales offices opened in the last 18 months to pre-sell condos in the GTA, in the TREB system, all over Southern Ontario, and about 90 closed because
90.
If you can't get to 75% pre-sale,
right,
you can't commence building. You just can't. Right. So I think the best result was like 34% pre-sale.
Wow.
You need 75. So even you mentioned that incredibly low new number, that monthly number that came out, 500 only in a community of 7 million people, only 500 housing starts in June. Well, actually, there's 200 of those probably don't exist because they were for high-rise condos that will simply be canceled. People get their money back.
Right.
So the reality is the construction business for homes to buy in the GTA, 7 million people, was probably 300 units in June. Wow. Now, if that isn't a collapse, I don't know what is.
Yeah. Ron, you've also, in your podcast, documented just how these properties over the last decade were built with one person in mind, and it wasn't a family, it wasn't a young couple even, it wasn't necessarily even a single worker starting out their first job or first career. They were built for investors. They were built for the Airbnb market, for instance. And the result is that there's a huge amount of stock out there that's effectively unlivable. Unlivable in terms of what people want, unlivable in terms of family formation, and going out and having kids and doing all the things that, again, people want to do. How does that work its way through the system? How do you get inventory that was so, in a sense, brutally reconfigured solely for one purpose, to get a certain value on a square foot price that made sense for an investor, and really a whole industry that lost sight of the consumer, of who was actually going to live in these units and the kinds of things that they wanted?
Well, that's 100% accurate, every word. And it's easy to sort of understand it, because if you're in the business of building these 300-unit high-rises, and you know your marketplace is to an investor, someone who's just going to either be a landlord or flip it later on, then you just think, well, what do they want? What do they want? And an investor who plans on renting or flipping never has an intention to move in. Never has he wouldn't let his kids move in. He wouldn't let his friend move in. It's just for some nebulous person who can be taken advantage of and stuffed into 455 square feet, which is ridiculous. In some states, that's not a regulation prison cell in some states in the union.
Wow.
So you get an idea that it was strictly investor driven. It ended up producing this hellacious product, which is only really meant to be a hotel room, like an Airbnb. And now that that's all gone, it's just horrific inventory, horrific product, a horrific place for people to live. What'll happen? I think eventually they get rented out because sooner or later the building is going to complete and someone's going to have to do something with that unit. And if the rent's low enough, somebody will come and live there. But I think it heralds a new era that the builders have to start thinking about family formation, people who can live comfortably in a reasonable square footage and a good layout in a good building with enough elevators, and more to the point, more low-rise, more townhomes, more semis. I would say that along with the sharp decline in woke and DEI in North America will follow a sharp realization that urban planners all just need to be let go. Just let them all go at every city and town across Canada. Let them all go. The fantasy of infinite high-rise densification has turned out to be just plain dumb, and new ideas have to start.
Two final questions. We saw today a big story in the Globe and Mail about developers asking that restrictions on foreign buyers be lifted, and that foreign buyers are critical to come into the market to provide those initial pre-sales to formulate enough capital for these projects to begin. What do you think about that? Because I thought that foreign buyers would be just as smart and just as intelligent as we are. They can read about what's happening to our housing markets in Vancouver and Toronto. Why would they step in and try to catch a falling knife? Why would they buy a pre-sale now on a square footage terms when they know that rents are falling, when they know that incomes have not, in any way approached the growth of the price of housing? Incomes have been stagnant, frankly, on an inflation-adjusted basis over Canada the last decade. And there's a recession risk out there right now over Canada. You opened the interview talking about the Bank of Canada's decision today. There's clouds over this economy.
Yeah, here's what it is. The eagerness for developers to repeal the foreign buyers ban is just plain hope. Hope that some trend will occur in the Gulf, that royalty would want to buy hundreds of units of dog crate condos in Toronto. It's just hope, or Vancouver, or hope that there'll be some new group of foreign national that could be duped into buying them. To your point, doesn't make any financial sense. So it's just plain hope. It's hope that the sheer foolishness that was done 10 and 15 years ago, where people from other countries were flown in, shown sales suites, bought 20 of them at once.
Bought entire floors, I heard.
Entire floors, and flew away.
Yeah.
A hope that there'll be a greater fool will be found in a different country. That's the hope, yes. Yeah.
Final question. You hear a lot of these developers saying, look, if you don't bail us out now, prices are going to go up because no one's going to be building anything. There'll be no new supply coming onto the market. What do you think about that? Because we have a very live conversation about immigration in this country right now. It's unfortunately become a hot political issue. We even have the Liberal Carney government indicating that population growth is going to slow over the next 5+ years. We'll see if that actually happens, but that's the intention. And the consensus on immigration, I think, has broken down in Canada. I don't think there's the same level of mass support for mass immigration as there was in the past. Do you think prices inevitably go up because of supply constraints that are created by this bubble bursting? Or is the industry possibly not contemplating maybe what the future could be, which is a long kind of slow period of just stagnant growth in real estate? This is just an asset class that will underperform for the next period of time. And frankly, people are going to put their capital to work in other places where they see more opportunity.
Well, if you're humans who want to have families in Ontario and British Columbia, you can't think of it as an asset class. You have to think of it as homes to live in. And this is where we need to make massive change. The requirement is for massive deregulation in terms of land use within this mythical green belt that some government dreamt up 30 years ago, and that has a bunch of NIMBYs and other sort of suspect individuals who keep proclaiming that it must never be touched, which is totally ridiculous. So we need honesty. We need opening up of the Greenbelt in an honest, scandal-free way. Scandal-free, Premier Ford. We need that done. We need to encourage low-rise development. We need the sensible, correct-sized townhomes and semis, 1,600 square feet, 1,500 square feet, where people do feel comfortable in starting a
But Ron,
family.
just on that point, how can somebody buy 1,600 square feet at 1,000 to 1,500 a square foot when the average combined household income in Ontario for a family is $86,000 a year?
Sure, you do it through deregulation. You do it from taking that land that's in the green belt and saying we're not going to flip it through three different, developers to try to maximize the land cost. We're going to go directly to people who are going to build the homes. We're going to cut development fees to zero. We're going to eliminate the taxes. We're going to eliminate GST, provincial tax. We're going to make it attractive to build 1,500 square foot low-rise units, and people will buy them in they'll buy a ton of them. Okay, that's true.
So in your world, the square footage cost is going to come down because of this deregulation, opening up of new land, reduction of development costs. That's going to realign the square footage cost, the final cost of the product, with people's wages and incomes.
Ultimately, what you just described, happening is up to a 40% reduction in price. 40% reduction. When you eliminate all the regulation that creates a 3-year wait to build something, you need 24 reports just to go and get an application to build a subdivision. The costs that have been added to the system are outrageous. The taxes and the fees are outrageous. You start getting all of that out of the system, and you will have a radically lower product to sell.
Mm-hmm. If you may correct me if I've got my numbers right, but if we're, let's say, 10% off the peak in real estate, 15 off the peak now
in Ontario, yeah.
Since the highs, I guess, what were those? 2021, 22?
March 2022 was the peak.
How much further do you think here in the GTA real estate will fall?
It's tough because it's an average, and some real estate will barely come down. If you're a prime home in a sought-after neighborhood in central 416 core Toronto, it may only come down another 5 or 6%. If you're in the worst scenario in the distant suburbs in 905, you could easily have another 15 to 18% reduction.
So you're thinking it could be in a city like Hamilton that saw a lot of speculative real estate, they could see losses from peak to trough of 30 to 40%.
Newmarket, Oshawa, Milton, you could see 40% from peak.
Ron Butler, this is just the conversation I wanted to have on the day that the Bank of Canada held firm on interest rates. Where can people find you, your podcast, your YouTube channel? How do they do it?
Everywhere in social media, either Ron Mortgage Guy, Angry Mortgage. You just Google those, you'll find it. And Butler Mortgage is our company, and we love to do mortgages for people in Ontario and BC and Alberta.
Awesome. Ladies and gentlemen, Ron Butler, you had him here on Hub Hits. Fantastic conversation. Please check out Ron's YouTube channel. And if you're on ours watching this right now, click on that subscribe button. The notification bell too. We'll send you our latest video as soon as it's published. And if you're over on our podcast feed, leave a review. We appreciate your comments and feedback on what you hear on the Hub's podcast channel. I'm Rudyard Griffiths. Thanks for listening and watching this edition of Hub Hits. Bye-bye.